What's up traders, Chris Capre here. So every single Friday with our price action course members, we do a member coaching session where all the traders from the course come together. They get to ask all their questions and I go over them personally. And we cover everything. We go over trade ideas that we had talked about during the week, what kind of trade setups I'm looking forward in the next week. We talked about trading psychology, price action context, order flow, meditation, getting funded by me. We talked about all kinds of things. So in this week's YouTube video, I'm going to share with you several clips from that coaching session so that you can kind of get an idea of how we work with our members, how we trade, and how we train them as well. Don't forget to smash that like button and subscribe to our channel. It really helps us out in terms of the YouTube algorithm and benefits our channel so that we can continue providing new content and videos for you every single week. Make sure to leave a comment on what you learned from that and enjoy the video. I'll see you next week. Okay, so welcome to today's coaching session. Good to have you all here. It's Friday. Hopefully it's been a good trading week for you. It's been a super busy trading week for me. Activity has definitely picked up. Market's getting a little hot. Volatility, ironically, within like a week or two of me posting that video about low volatility, and I said, hey, I think this is going to change soon. You know, I don't know when, but I think it's going to change, and we get a huge spark in volatility. So a lot of volatility to me is opportunities. If you're smart, it's an opportunity. You just need to learn the patterns and the strategies and techniques and adjust to that when volatility increases. And so to me, volatility is movement. Movement equals opportunities, means greater opportunities. And it's been a great week for me. Hopefully you guys have had the same. We're going to go over today's questions. We're going to look at some charts of some things that I'm either in now or looking at right now, or things that we talked about in the daily trade ideas. A lot of daily trade ideas hit this week really well, and it played out as is. First, we're going to begin with questions. And so let's jump into this. Gary, question. Hey, Chris, if I'm trading intraday and only FX majors, do I need to take into consideration of the trading sessions, i.e. avoiding trading certain FX pairs during certain sessions, or just ignore the sessions and just trade according to price action context? So if you're trading intraday, and you're trading specific instruments, you need to know those instruments' patterns and volatility per session. Each instrument is going to have different liquidity flows, different order flow, different movements per session. And so I think FXCM has a pretty good study about like average pip ranges per session, when certain pairs are more volatile, when they're less volatile. I think they did that a while back. It's a pretty good study. And so you need to know that. You need to know that dollar CAD's not going to move a whole lot in the Asian session. If you're day trading dollar CAD and you're only available in the Asian session, you need to switch instruments, switch to a different pair. If you're day trading, you need volatility, you need patterns of liquidity and order flow that create opportunities. And certain instruments are just not going to be active during certain sessions. During the Asian session, Japanese yen pairs can be hot, Chinese yuan's hot right now, especially with the trade war going on and the fixing and everything that's going on. Kiwi's hot, not necessarily in a good or bad way, it's just moving right now because of the surprise 50 basis points RBNZ cut. Swiss franc's not going to have a whole lot of movement and liquidity like Euro Swiss or CAD Swiss is going to have very little movement in the Asian session. So whatever pairs you're trading, yes, you need to be paying attention to the session, and you want to make sure that they're moving in a way that's natural for the sessions that you're trading. Okay, next question. Shijiang, question for the webinar just regarding being funded by you. How long of a live track record should I have? 1 year? How much capital should I start with for this live account? Capital doesn't matter. I honestly don't care about capital in terms of the capital that you're starting with. What I care about is that you are trading your own money or you're somebody's money and you have a consistent live track record. The most important things to me are consistent risk parameters. So 97% of all trades have the same risk parameters. So if you're risking 1% per trade, then 97 out of 100 trades should be at 1%. Now, if you're trading a small account, sometimes the position sizing you don't have enough room to make it, 1% exactly. Like maybe it's 0.8% or, based on the size of the stop loss, or it's 1.2 or something like that. That's fine as long as you're really just close to that and everything's just right around that. That if you were to adjust one position side up or down, you wouldn't get any closer or anything like that. That needs to be consistent. Consistent behaviors, that means you're trading the same instruments. I'd like to see somebody who's making some money. In terms of how much, on the low end, I feel like if you're making 5 to 10% in a year, then I think that's workable to be funded, because I feel like if I was to fund you, I can probably improve your performance, give you a lot of feedback, give you a lot of training, and help you with that. Next one, let's move on. Kwame. How do you know if your meditation session has been effective, especially if you were distracted a couple of times while doing it, like your mind going off track for a moment and coming back? How do you know if your meditation session has been effective? If you really understand the meditation practice that we're teaching, the Shine practice that we're teaching, or the base of the Shine practice, in the ATM course, they get the full series of the Shine practice. But in this course, you only get a couple introductory lessons into it. So the practice is, Shine basically means remaining uninvolved. And why, if you think about that, why would they call it remaining uninvolved? It's because the people who have completed this meditation practice know that the mind can be busy or it cannot be busy. Thoughts arise and fall. Sometimes thoughts arise and they keep going. Or sometimes a thought arises, you think about something, and then it triggers a thought chain about something else, and then something else, and something else. And these are things you learn when you start to do meditation practice, when you actually take time each day to observe your mind, where the only thing you're doing is observing your mind. Remaining uninvolved, the people who created the meditation practice, that designed it, knew, they fully understood how the mind works to where they called it remaining uninvolved, because they know that thought arises and then it stops. And sometimes it arises and keeps going for a while, but eventually it stops. And sometimes there's no thoughts for a while, but then eventually another one arises. Remaining uninvolved means that you allow the thought to arise and fall. It also means that you don't reify the thought by thinking about it. You don't kind of continue along that chain of thoughts. So you're not reifying is like rethinking the thought over and over and again. And I'm sure you've had this in your trading, that while you're trading, that you've had the same thought happen over and over and over again, either in the same trading session or across multiple sessions. And you're like, wow, I'm having the same thought. You are remaining uninvolved with that process. You're aware of it. You are aware of it arising and falling. You're observing it arising and falling, but you're not getting involved with it. You're not engaging it. You're just letting the thought arise and fall. That is not something that can be taught conceptually. Aside from having a neutral bias when trading inside of a large corrective structure, could we have a neutral bias among other corrective structures, such as medium-term and short-term corrective structures? You can. The nature of the order flow in a corrective structure is that it's balanced between the bulls and the bears. Nobody's in control. Therefore, we're not going to have, at least during the time period of the directional of the corrective structure, nobody's in control. So the market's most likely going to oscillate inside that corrective structure. So you want to have a neutral bias to some degree, but you should always, as much as possible, have a with trend bias, with the caveat that you need to be flexible, that, hey, I need to have this kind of if-then scenario prepared in my mind, that if this happens, then I'm no longer thinking of trading with this trend. So the smaller the corrective structure, the less neutral bias you would have. Because if you think about a wide corrective structure, let's just take like dollar yen was stuck in like, a several hundred pip range for a long time. That's a wide enough range where both sides of the market can really have their play. They can play a little, tennis back and forth there inside that range, and both sides can make money. But if that range is like 30 pips, then you're going to eliminate a lot of players who are not going to participate in that range. And so by default, you're going to have less players. And by default, the smaller the range is, especially if like we have an uptrend and then we have a corrective structure at the top, that's generally more bullish, especially if it's a small corrective structure, than if it was a wide corrective structure. Wide corrective structure means that it's oscillating, it's taking up a wider amount of that prior uptrend. That means that there's a lot more counter trend players in the market that can push the market back down. Bulls come back and push it up, they push it back down. That's a lot more counter trend players versus a small corrective structure at the top. Kimolani, you are the best mentor, an oasis in the desert. I appreciate that. Thank you. I take a lot of pride in my work, and I hope it influences. My goal is to have a positive influence on and change the way you think, trade, and perform. That's my goal as a mentor, and to turn as many of you into profitable traders as I can, and not just profitable traders, but people who are successful in life, who have positive influence on others in life. And so, if I can do that, then I've done my job. And so, You're saying, I'm very interested in Ichimoku course. I'm finishing the APA. Very happy making profits in crypto. I'm taking notes of everything on all your videos. Like to know if Ichimoku's course is something totally different, something I can use as a confluence with APA, how I can benefit. Ichimoku and price action can be used as a confluence, but they have to be, those skills have to be built in isolation. You want to build them in their own lab, and you want to separate them. And so you learn price action as its own skill, you learn Ichimoku as its own skill, and then only if after you have kind of like a working skill set with each one, then you can slowly start to integrate them and play with that and experiment with that and see like, okay, how can I, in the ways that I like to trade, how can I use the methods from both of these courses to create a more powerful trading strategy? It is something totally different. It's a totally different way of looking at the market. There is some elements of price action built into Ichimoku, but it's not candlesticks. If you have translated the original text and Sasaki's text, they do talk about price action from an Ichimoku perspective, but they're not talking about, they really don't have like this in-depth analysis about candlesticks. That's not an Ichimoku. Can you all see my screen? Kiwi yen looks to me like Kiwi yen is rolling over from its relief rally. So this was the surprise RBNZ cut. People dumped Kiwi across the board, and some pairs bounced a little bit, had to have a little bit of a relief rally, and that's happening. And so short-term corrective structure, this is short-term resistance. It's starting to roll over a bit. It's Friday at this point, so I don't think there's any trades to be taking now. But next week in market opens, if this start to kind of goes correctively like this and treats it as resistance, then I'm going to sell it, target the bottom, and a new leg down. If this doesn't hold, then I'll be watching for a deeper pullback. But I just don't think I think it's less probable that the Kiwi dollar is going to gain versus the yen. I think it's more probable it's going to lose against the yen. Yeah, that doesn't match up there. So let's go daily. See, like this is a weird thing about Saxo. I draw a line in another time frame and it doesn't stay on this time frame. Why is that? Saxo, are you listening? You should be. You need to fix that. That's just ridiculous. That should not happen. If I draw a line on one chart, it should stay on all time frames. It should not disappear. You need to fix that. Yeah, I mean, Kiwi's in trouble. Kiwi yen's in trouble. Look at the bounces. So boom, boom, same high. Probably extended here. Yeah, I can even extend here a little bit. This is a little bit beyond it, and this is a lot, but even if we just go here. So bounces, what the F just happened? Where did you go? Okay, we're back. So look at the bounces. So super strong bounce, same level, just a little bit past it. Hits the same things, 83.39. Hits it again, boom, boom. But then, look at this bounce. It's much weaker. It didn't make it all the way back. And the highs are getting lower and lower and lower and lower and lower. This one got close to support, bounced, just really didn't find enough buyers, and then broke through. So I'm bearish on this. I think Kiwi yen's in trouble. I think it could bounce, up to 70. It might even go up to 72.50, or whatever this is right over here. But I think Kiwi yen's in trouble. Unless we get some sort of if there's some sort of change in the risk environment, like the China trade war ends, US-China trade war ends, then I can see all the yen pairs gaining on it. That's a risk positive event. But as long as the risk events that are happening right now are still out there and still continue, or just are even lurking there, I don't think people are going to want to be long the Kiwi dollar versus the yen. And I'm not seeing that in the chart. People aren't wanting to be long with it. The bears are winning, and they're continuing making lower lows on the tops and the bottoms. And so, yeah, Kiwi yen's in trouble for me. Kick me out because I talk bad about the platform. So Gary, just log back out and log back in if you can. So yeah, I think Kiwi yen's in trouble. I'm looking to short. So if we were to break through, where do I think it would go? This is definitely going to be some support, in this area. In fact, I should probably, I don't like that one. Let me draw a rectangle. It's a big zone, but you could find support. I'm willing to bet that if we get a weekly close below the current weekly lows, either this week or next week, then I think it's going to find its way to 65, and then I think it's probably going to find its way to 60, more likely. I think if we get those weekly closes, I think that's more likely to happen than getting a close above 70 or 72 on a weekly basis. But yeah, I'm bearish on this, Sunday or during the week, during the daily trade ideas commentary. Pound Swiss is in trouble. I don't know why I wasn't thinking pound Swiss. With the whole Brexit thing, it was obviously very bearish for the pound, but because it was one of those situations where they're like, it's on, it's off, it's this and that, different prime minister and all this and that stuff, I felt like just kind of staying away from the pound dollar, and I was so focused on other things at that point that I had plenty to trade. So, but then I took a step back there today and I was like, oh, wait a minute. Okay, well, the pound is probably losing against pound yen for sure, which I haven't been watching a little bit. And I'm like, it's definitely losing versus the Swiss franc, and so there's probably going to be some players who are going to take some longs here, or some shorts that are going to take some profits when they hit those levels. So I think there's going to be some mild bounces, but as long as the specter of Brexit is still unclear how it's going to manifest, how it plays out, I think the pound's going to continue to suffer. And I think it's going to suffer the most against Swiss franc and pound yen. And so I think that's where it's going to really struggle. Euro pound has been doing pretty well, just based on the fact the pound dollar is just getting hammered. This was the breakout of the century. This is one of the best breakouts of all time. Made a killing on this back in the day. This was just, it was just an amazing breakout. In fact, this is when I was a broker at FXCM, and I had this, it was actually during my last few months with FXCM, and I had this client that, he was a very well-known commodities trader. They used to call him the cowboy, but that was like back in the 70s and 80s. And so he was like in his 70s. He was retired and he had 12 screens up and he was watching everything. He's like, you got anything for me? I was like, I do got something for you. I was like, pound Swiss, and he looks at that and he's like, oh yeah, I like that one. And he knew exactly what I was thinking. He knew that this was going to be a massive breakout when it did. And so, I'd given him like 3 or 4 recommendations over that month. And he's like, all right, he didn't like the other ones. They just weren't his style, but I gave him this one. He's like, I like this one. We posted this in the members commentary. What did we talk about? We said, look, counter trend impulsive move forms corrective structure, and it just kept building, and it was looking like not just a corrective structure, but a breakout inside of that. And so, look what it did, just boom, 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 took off. And we said, I think, what did we say in the DTI? Where did we say it was going to? Where did we say in the members channel it was going to? Anybody remember? I already went to first resistance, which was 53.71, and then 54.44. It hit both. So, counter trend trade, but offered a pretty tight stop. Get in on the breakout pullback. So 52.96. Short stop here, 60 cents. 90 cent here. $1.44 upside. So 1.5 on the weakest version of the trade. And if you went with the 60 cent, then you walked with about 2.25 R done in a day. So hopefully you guys profited from that one. If you're not growing, then you should be constantly examining what it is you're doing that is helping you grow and what is it that's not helping you grow. Every single month, every single quarter, every single year, you should have built more positive qualities that month, that quarter than you had before. And if you're not, it's okay if you have a corrective pullback in your learning process, but you need to know what it is, you need to fix it, and you need to adjust it, and then you need to be building those positive qualities. Super important that you're constantly focusing on getting better today, and growing today, and making sure that you have more positive qualities now than you did 6 months ago, 3 months ago, a year ago. Otherwise, you're just going to spin your wheels and waste a lot of money, and it's not worth it. Why? If you're going to spend a year, you might as well spend a year growing and making money. And if you're not going to make money, then you might as well spend that year growing. Better than just repeating the same mistakes that you have been 2-3 years ago. That's not useful. It's not useful for you. It doesn't benefit you. You've put the time and energy into this. You've worked hard at this. There's no reason why you shouldn't reap the fruits and the rewards of this. They're there for you. There's gold for you there. That's a real thing. Go get it. Build your positive qualities every single day. Do that right, and the gold will be there. So have a great weekend. Be well, and I will see you guys next week. Take care, everyone.